Good evening, baby pipsters. It's ICT with the ICT Pro Traders Club review for the fiber and the cable. Okay, we had two trades today. Now, before we get started, there was some homework assignments I wanted you all to incorporate in your daily routine, and that was basically noting the session open and close for Asia, for London, and for North American New York session. I gave you the times to note on your charts, and you can use a small little trend line concept like I use at the bottom, denoting where the beginning and ending windows that we would look for as our opportunities to trade. And this is one of the fundamental principles towards consistency as a trader, and allowing you to not feel rushed to be in market all the time, and looking for opportunities when there may not be one. The most reoccurring and repeating question I get in email is, how do I know when to trade? And this concept was one of the biggest milestones for me in my trading, because much like most new traders, it's very easy to look at the chart and see volatility at any given time of the day, but just because it's moving around doesn't necessarily mean it's an opportunity time to take a trade. So, alright, so let's look at what we've Euro on a 5-minute chart. And the reason why I have a 5-minute chart is going to be able to illustrate all the concepts in a more dynamic fashion. You are not to be looking at a 5-minute chart all the time, but you are permitted to use the 5-minute chart for entry purposes and fine-tuning your entries. Okay, so this is Monday's trading, and basically this was all of the late portion of Monday. Now, I didn't take any action in Monday because simply it was a bank holiday for the US, and those opportunities are in place for the market to become very thin. And when that happens, you see a new day start in here. All of the orders are new. Now rollover is pegged to 136.80 figure. Sorry, not figure, institutional level. Just in time to have everybody that would be long, they roll over to a high, the price that gets them in at 136.80, and then immediately, because it's thin, the big boys take the market lower. And even support and resistance, for instance this low here, had nothing in terms of support. Okay, so we were flat yesterday with no trading signals because of the bank holiday. Now we enter a new day here. This is last night in New York, midnight time. That's where I live in the globe, so I use midnight as my new day. Okay, so with new pivots ran, central pivot comes in at 136.23 for this feed. Okay, and we are entering a new day. Where at, guys? Is it above or below the central pivot? Below. Okay, so for the new day, we start looking for pivot zone trades, because it may not necessarily be a trend trade set up yet, but right now, based on pivot zone trading, we are in what zone? Is it the buy zone or sell zone? Okay, your notes should tell you that anything below the central pivot, at or below the central pivot, would be considered the buy zone. So we are looking for a buy or long bias. Okay, market trades down pretty hard in here, pretty scary for those that aren't versed in how the market flows work and try to seek out stops. And I'll go over why this was a stop run in a moment, but for now we have S1 coming in at 135.30. Okay, now this rectangle in here is my way of showing and highlighting what? Well, here we go. There's your window for the London Open. Okay, this little magenta colored line in here delineates 3 a.m. Okay, so you want to have 3 a.m. as your crosshair mark for London Open, but the trades for London Open could happen as early as 2 a.m. at Eastern Standard Time, New York time for me, and as late as 4 a.m. Now, will you have trades eventually happen at 1 o'clock or even at midnight? Yes. Will you have trades that come to fruition at 5 a.m.? Yes. Okay, but I'm giving you this window as your hunting grounds. Okay, as a sniper, this is how you set your crosshairs up. You just wait for price and time to meet. Now, you cannot get any more textbook than this trade right here. I gave you the reasons why I wasn't willing to trade the cable based on its sloppiness, so I elected again for the euro. So these are not real quick reaching for showcase trades just simply because I want to put them on a video. These are all the factors that I've given you in the previous videos. I've elected to follow the euro going into the London session, and we have the window set up 2 a.m. to 4 a.m., which was given to you in previous videos. Okay, we are in a buy zone, which was taught in the core concepts videos, and we have price trading down to S1. Okay, so pivot zone trade sets up, and we also have the S1 coming in at a really nice small round number, which is 135.30. Okay, now looking back, because we got to look at where we came from. Okay, price traded all the way down in here, once in trading, and all of a sudden we've really broke down largely to reach for a support level on the pivots. Now, below this low in here, there was a pocket of stops, and I'll explain how I knew that and why you can expect a bounce in here, not simply because we have a technical setup, but also there was a stop running event that took place in here. So we'll go into that in greater detail in a moment. But for now, okay, now that I've noted this, okay, I'm going to take this out just for a moment. Okay, so now we have our windows still noted with the lines, okay, and 3 a.m. is down here. Price trades down right into S1, okay, begins to rally, trades back down into S1. What is our entry pattern that we use for low risk entries? Well, we run our fibs across the low to the high. Okay, right on here on this candle here, okay, this is when you could get your fill. Okay, this candle here gives us what? It's a doji, okay, a long-legged doji actually. That is a indecision candle. Okay, basically price traded down, then back up, and then we traded back down to the S1. So now bears are more or less scratching their head saying, well, it's come down a long ways. Do we really want to be shorting it? Okay, this right here, right at a S1, and also in an area where optimal trade entry right there takes place. Total drawdown on a trade was less than 10 pips. Your stop would be minimum, okay, minimum 10 pips below here. Now, as a standard trade, we use 30 pips as a risk. Okay, so as it's trading down here, we want to look for 135.30 on a limit. You got to add the spread, give it 3 pips, so 135.33 limit order, and that would suggest 135.03 was your protective stop. Okay, so I'm sorry, I got to keep looking at my notes and see where I actually got filled at, so I apologize. Take that out for a moment. Okay, so now we have a trade in place. It starts to run up. Okay, this low here would be an area to be concerned about for potential short-term resistance, and you can see price traded down just a little bit in here, and found support in these short-term fractal highs. Okay, now this is how the market makers work these dealing flows. Okay, we want to see now price traded above here. We want to see price eventually hopefully get above and trade back down to this high as support. Okay, price trades above it. Right in here, you want to take 30% off on 30 pips. Okay, so now the reason why, because this turn right here, this could have very easily went and blown all the way down and took out the London low. So that's the reason why you want to take out something at 30 pips. And obviously you can see other players in the market are doing that very thing. They take a little bit off the table. Price trades slips below just a little bit of this dealing range high here. Okay, down into this low here. And then begins to take off. Now, right here, when you see this action here, you want to look back over to the left side of your chart. Where are the reaction highs? Because now we've got a really solid swing in place, and it just took it out. So what tool now are we going to use? Well, you pull out your fib. Okay. Place that on the low. I'll come back to that low and fix it in a second. You want to drag. Actually, let's go back and fix it now so it's resting right on it. Okay, right on the low, right there. And let's drag the fib. Now what you want to do is you want to be monitoring, as I drag the fib, this level right here. Okay? Keep your eye on that line as I drag this up. Okay, you see that right here on this high? Fib sitting right on there, 50%. Okay? So this gives you what? A projected high based on this swing here. Now that would be your first objective to start looking for profits. Okay, around the 136.70 area. Okay, which interestingly enough, if you go back here on the left side of your chart, is a little tiny. Not that it's really that big of a deal, but I found that little this candle here interesting that it called for this high in here as a projected high. Now, that's one swing concept. Let's now look at this. You want to take the fib. Let's get some more data on the chart first. Price trades up to what? Central pivot. Okay. Remember we were talking about in the previous video, last Pro Traders Club video, whenever price gets pulled away from the central pivot, okay, when there's no longer any more downward pressure, okay, they let go of it, and it has to do what? Pull back to fair value. Price, when it gets away from the central pivot, will always try to seek its fair value, okay, or equilibrium, and that's found at the central pivot. Now price trades above it. Doesn't really give you an opportunity to trade back down here for the the New York session. Okay, so if you haven't caught this train, basically you get the hell out of the way because you're going to get ran over. And as we traded back up to even previous days central pivot, found some resistance in there, and now we can go back to our fib and take the low, pull that up to our high. Okay, and what that would have done, that would have highlighted an opportunity. Maybe as price was trading here, if we could have traded back down to here, that would have been a really good consideration for buying, because that would have came in at what level, guys? 136.20 institutional level, which would have had a 23% retracement level and essential pivot overlap. Okay, didn't come to fruition, so that was a missed opportunity for New York. If you haven't boarded the train, you missed the boat, basically. All right, now pulling our fib. Now I'm going to pull it a different way, because again I have my fibs calibrated to be able to show the extensions by doing it this way. So if it's confusing, just go back to your videos where I teach how to put the fibs in. Okay, so you take the high, place it right on the high so it doesn't move away, hopefully. I don't know why these guys give you a hard time when I'm filming. Okay, so you're going to take the high, pull it down, and your extensions that I taught on your material for fibs, which ones to enter for your platform, you'll get these. Okay, and you can barely probably see it, but here is the extension in here, and it was just a few pips, maybe 3 pips away from calling the actual high, which incidentally came right in at what R1. Okay, now also moving along, leaving those same fibs in here. Okay, another 30% came off in here, and what I was reaching for, I was trying to see if we could have enough gusto to get to the 137 figure, because it was so much price dynamic in the market today. It just kept pushing higher and higher and higher. We moved sideways in consolidation, which gave me indication that we probably could have seen another even higher leg in price, and ultimately the higher extension on the fib called for this high in here, and basically I got stopped out right in. This was the area where I had my protective stop trailed really tight, and I got tripped out of it on this candle right in here. So also it happened to be an exit time of what window did I also teach you guys in the previous video to look for your homework. There is your London close window. Okay, so the high came in where? Exactly where I taught you. Okay, so and this is your 11 o'clock New York time, which is the midpoint of what would be considered our London close. Basically 10 a.m. New York time to noon. New York time is a real good time, but it can go as far as 1 o'clock if things get crazy. And today could have been very easily one of those indications. Okay, so that was the trade for the London session for the euro, and not to brag, but that's exactly what a really stellar, perfect. If I want to say anything, it's one of those perfect setups where a lot of your tools come together, and it makes it very easy, and you know when to do it, know when to expect things to take place, how to project the targets, and so basically I answered a few of the questions in the thread that we'll come back to later on, basically on target projections and what time to trade, when should you be looking to get in a trade, and directional buys. So you can see if you just have the patience to wait for the tools, they'll come, and when they come, they will pay for all the days you waited or chased duds and got nothing from the market. So that was the Euro London trade. Now we're going to look at the cable for the New York London close. Okay, we have the cable again, pretty sloppy, guys, and we are trading below the central pivot. Okay, so we are basically in the buy zone. Okay, but because of the euro, that would have been striked out. Okay, but basically looking at this area of consolidation, you can see clearly that there is a line delineating. Let's put it in here for clarity's sake. You can see how price traded both sides of this level in here. Okay, basically 162.30 would be a good rough approximation of where that is. So if we take a fib, run it from this equilibrium point, drag it down to the low of the day at this time, right in here, this low, and let's draw this back up so because it's just slipped off. Again, while I'm recording, I have no idea why it keeps dropping away from it, but okay, so that's where we're at for right now, and we will look at how price traded back up to 62% retracement level, central pivot overlap, gunned out all the stops in here. Okay, and basically it's a turtle soup trading pattern. Here's previous high, trade above it, fake out, false breakout, and then they slam it down to a fib extension, also below S1. But ultimately, because we never traded to previous days S2, that was your projection. Carry those pivots. Remember I taught you in the videos, carry your pivots over that were never touched, and there we go, we get the low today. So that was the London close trade for today. It came in for the cable. Okay, so 2 trades, pretty profitable day. And look what happened, guys. You had all this mess from yesterday, and right behind it, on the heels of that type of day, you get really good opportunity. So I wish you good luck and good trading. Okay, guys, we are looking at babypips.com and the thread I've been hosting, what every new and or aspiring forex trader still wants to know. Okay, we have Vonner. Excellent, excellent, excellent. I can't stress that enough. Very, very good technique. He had optimal trade entry, downtrending market, flows were down, very good. Took 30% off, excellent, very, very good. I want to see that happening with everyone that posts a trade. And I don't care if the trade makes 250 pips. If you didn't take anything off at 30, I'm going to scold you for it, so be prepared for that. And excellent cover, very, very good. Price traded down a little bit farther, but who cares? You took your trade, you traded your pattern, your system, and excellent, excellent, excellent. You cannot go wrong taking profits like that. So 70 pips, awesome, very, very good. This is proof that it's not just me doing this, guys, and I'm stoked to see more people like this posting. It's excellent. It's encouragement for not only me, but obviously for those that are following along, and it just proves that I'm not pulling hindsight trades out of a hat. So the things are being caught by these tools. It's an encouragement. I can't stress it enough. I'm stoked. 70 pip. I mean, that's what you should be looking for the week. And I'm not telling you what to do, and I'm not an advisor, but 70 pips in the pocket already, that's a really good week. So I'm going to definitely like that. Very good, Vonner. LS1. Okay, excellent. 50 pips, man. You cannot go wrong with that. 50 pips is a nice haul. So kudos to you for that. And yeah, that's a good idea, going with OTE as an abbreviation. I think most of us can follow along and know what that means. Alright. Yes, whenever you see the premium nullify and in the market, you can look for, right now the nearby contract is March, and we don't have very much time left for that contract. So even though the spread may be narrowing and the premium no longer present in the nearby, you still want to look at the next month out, which would be June and then September contract, to see if the premium is still not present in that. But there has been some shrinking and collapsing on the spread. So yes, I believe you're accurate in your assumptions here. But again, everything still has to line up and basically confirm a trade, not just based on COT. COT is a longer term perspective, and if you just focus on that, you're going to miss a lot of opportunities, which isn't a bad thing. It just means that if you have your focus really solely set up on traders data, I'm going to tell you right now, your number of trades are going to be so low. Being a new trader, you won't wait. I can tell you right now, you won't wait. You're going to go in and you're going to start taking trades. So that's really the reason why I'm giving you the information for the pivot zone trades in conjunction with trend trading, because I know, just like I was in the beginning, I wanted action. So this is how you're going to be able to find it and still be able to take a good chunk of change out. So very good question. I like that. It's good. Okay. Yeah, your homework, guys. Later on, you'll see 636. He put a chart up, with the London close delineated and noted on his chart and highlighting a London trade. So that's cool. That's what I'm looking for, guys. Alright, Clark. Well, basically you want to take your time, and the loss that you've taken, this right here should be a red flag. If you're brand new, don't risk 2%. Just keep it at 0.5% or 1% for right now, until you get at least 20, 20 good trades trading with these concepts, and you get comfortable doing it. There's no reason for you to be risking 2%. Keep it keep it less than that, 0.5%, no more than 1%. Even on your demo accounts, get used to seeing small numbers in the beginning and gradually work towards higher numbers. It's important for you to get your psyche prepared for the drawdown, not only the good side of profits, because I can tell you, seeing $20,000 roll up on your account, in a profit, it's exciting, and it's very hard to suppress that if you haven't gradually built up to that. And on the flip side, when you see your account get tagged with $10,000 loss, because eventually you guys will get to that point if you work at it and you stay at it. You have to be able to prepare yourself to take those types of losses. If you get clipped for $18,000, $20,000 in one trade, what's that going to do to your psyche? You're gonna be paralyzed. It shouldn't be if it's only 1% or 1.5% or no more than 2% of your total account. So you got to start building that mindset now as new traders, because if you don't, you're going to be paralyzed later on when you get bigger. Okay, Hordane. Yeah, I had the same issue. You got to wait for a little while to get to be able to post. So I appreciate that, giving them a heads up. QWERTY, same thing. Thank you for that. Okay, I'm gonna take a chance here. Rokas 1989. Yeah, Rokas 1989. All right. Well, you're very welcome. Just a note in the future: try to go with a different color candle for your up candles, because it's very hard for me to see them on the screen, and I'm sure it's very hard to see for the viewers in the video and on the thread. So it's my pleasure to be able to do these types of things, and I appreciate you taking the time to express your appreciation. I really appreciate that. Thank you. I like that. Thank you. Moving along. All right. Yeah, I noticed there was another goober that showed up for whatever reason. Voted down on the thread, and that's fine. I asked if they would do that. They would just give some insight as to why they felt it wasn't reaching its intended purpose, because I can build a lot based on what you need or are looking for, because I've done a lot in trading. So if it's not present on the thread now, I'm sure if given time, what you're looking for most likely will be found on this thread. And it sounds very egotistical from a certain perspective, but again, I'm confident that this is going to deliver what everyone's looking for. I picked up a couple more votes for it being a good resource. Thank you for that. And I think we picked up one more of the seasoned trader recommending the thread, so I appreciate that as well. The likes for the thread's actually picking up too, guys. I appreciate that, and I'm sure that the guys that are posting are appreciating that as well when they receive the likes. I thought that was a really cool feature for Baby Pips. Again, thanks for that. All right, Shandy. Excellent, excellent, excellent. That is awesome. Let's pull your chart out real quick. Same London session close. Trend trade, pulling the fib from the high down to the low. 62% retracement. Confluence with the central pivot, awesome, down to the extension, very, very, very good. If you're going to use the stochastics, my advice is to take off the 833, change it to at least a 10 or 1433, just for smoothing's sake. So yes, I definitely like that. Awesome trade, good trading there. I agree, George, that was an awesome trade, stellar. Alright, the data for the COT you can get from cftc.gov. I think it's the website you can get that. It's free. It's in a format that's really not really friendly at all, but There is a website. If you look real hard, I'm not going to advertise, but if you look real hard, I've given it already. But that's the resource I use for COT. But again, it's not a sell. I'm just letting you know it's available if you hunt it out. So, good question. All right, 636. Okay, we have the chart showing the London close time frame. Okay, so that's good. You want to have this set up going into your new day. Every single time you enter the trading session that you intend to trade, you may not necessarily trade the Asian session, but still note it on your chart, because this will build the confidence that you need as a trader and start seeing that you don't have to be guessing when to be doing something. The trading patterns that you're learning on this thread are very, very generic. They're based on how the banks trade. They will do the same thing over and over and over again, and all you have to do is jump on their coattails and ride along for the ride. Okay, so awesome. Keep doing that. You're going to find that your trading will build a level of consistency that will shock you. Very, very good. Appreciate that. All right, McWally. Let's see. Yep, I agree. Very, very good. Kudos. Shandy. All right, well, that completes the ICT thread review for feedback. Okay, we are looking at the ICT forum for my blog, and this was posted by MD Trader J. Okay, it says, I have a few questions on futures backwardization. I believe you said this condition draws buyers into the market. Well, it doesn't necessarily draw buyers in the market. It's illustrating that there are buyers in the market on the commercial level, because they will be buying large blocks of it. We're going to speak in terms of commodities because that's where I'm basing my understanding. Commercial traders will be buying up the product, okay, and because they have a real tangible need to be utilizing it on a large quantity, so they will be buying it now because they don't believe, much like a regular carrying charge market, it's more expensive for commodities to be held, produced, grown, taken care of before they come to market at a later contract date in the calendar year. If that ever reverses, that means that they don't think it's going to be cheaper later on down the line in the calendar year. They have to acquire it now, lock in what they believe is a low price or a profitable price. Otherwise, they wouldn't be buying it right now. They would just wait for the cheaper price later on. Okay, so just some clarification there. And it says, how do we balance this in consideration with COT commercial net traders position? Currently, commercials are net short on the cable and have been increasing short positions for weeks now. Okay, this gets back to what I was stating earlier. COT data is such a long-term perspective. Don't be thinking you have to be looking at it every single day, because you're going to get tripped up, and you have to wait for patterns to set up on a longer term scale that'll tell you that the move is now in place. It ain't going to give you the ability to call the high and low all the time, so don't think that you're going to be able to get that type of information from this. Okay. All right, so generally, how long does it take for backwardization to be reflected in the FX spot market? It can take as much as 4 weeks. So, I mean, I've watched in 1995, 94, 95, when the yen had a huge run up. There was a premium in the market that took like 3.5 weeks to see the technicals line up. But if you can get data to go back to that level in time, look where the yen went. I mean, I made tons of money in that, and it was based on this premise, waiting for the technicals to get in line with the fundamental underlying factors that we're seeing by looking at the premium. Okay. Do we need to see backwardization repeated for multiple days before the pound dollar moves up? Well, whenever there's a premium, you will see a premium there for at least a few days. It doesn't just all of a sudden go to a premium and it goes vertical. So don't think that. It's like I said, it's a long-term trading pattern, and it sets up trades that put the market in a swing for anywhere between 2 and 3 months. So that's how COT works. And to understand that, just get a chart that has COT data on it on a weekly chart, and you see how it shifts in and out quarterly, where the commercials were the previous quarter, and look and see that the price of the underlying market that it's being plotted against, it will move in that trend. And that's the key. You want to find out what the market's trying to do, flow and trend wise. And for instance, if it's bullish, if the commercials go bullish, that sets everything up for you to be looking for a buy signal that's really low end in terms of risk. So I hope that answers your question. If it doesn't, just repeat it with a little bit more specific need, and I'll address it further. But I am working on a $1 million trade concept presentation. It's just a lot of stuff in it, guys. You just got to give me the time to put it together. But for now, I hope this satisfies. Until then, I wish you good luck and good trading.